Dear all, we are going to talk about a topic on from fundamentals of accounting to SAP FICO. This will be the complete learning path for the next generation for accounting and SAP FICO guide. What we are going to learn here, we are going to learn the basics of accounting, the principles of double entry system, journal entries, ledgers, financial statements, balance sheet and profit and loss account, and then SAP overviews and then SAP fundamentals. And that we are going to cover the topics on SAP FICO. Uh, on SAP FICO, there is a two submodules are there, SAP FI and SAP CO. In that SAP FI, they will be having a general ledger, accounts payable, accounts receivable, assets, and bank accounting. If you see the general ledger, we'll be having a chart of accounts. They'll be having about a chart of accounts will be there. It will be how the accounting will be happening. That's why we'll be having a journal entries and ledgers, and then AP accounts payable, the supplier, how we are going to create a supplier invoices, how we are going to make a payment to the supplier invoices, AR accounts receivable, how we are going to make an invoices, how we are going to realize the money from the customer, like that assets we are going to purchase a building which is assets, and then how we are going, banking is going to help us to payment for the payment to the supplier, and then receipt from accounting for the receipt for the from the customer also. Now SAP CO. SAP CO is it is helpful for internal management reporting. To management knows that how much a profitability for each product which they manufactured. And how now we are going in the sub SAP CO, we are having about cost centers, profit centers, internal orders, product costing, and then profitability analysis. And then we are going to cover about integrations with other models like FI and sales and distribution, FI and materials management, FI, and then production planning. And then we'll be covering up the month end closure of the FI and CO process. Today we are going to talk about fundamentals of accounting, how it is accounting has been going to help us. So like a journals, principle of double entry systems, golden rule of double entry systems, we are going to talk on the topic now. Now, when you're talking about the basics of accounting, the first one is a business transaction. What does it mean by business transaction? Identify a record of all the financial transaction. For example, if you are purchasing a raw material, if you are purchasing a fixed assets, if you are purchasing an assets, fridge or any other furniture. So you are identifying the transaction, what is that, and then recording all your financial transaction to ensure that it has been recorded in the books of accounts. And then source of the document. What is the source of the document? The collect and organize the receipts, invoice, and the statement. So how we are going to do that? So what is that? Getting that invoice as an evidence what we have purchased, as for the fridge or for a furniture, for a raw material, that is the source of the document. Recording of that. So we are recorded that the journals has been recording the journals of accounting of the transactions after identifying the business transaction, after identifying with the source document, and then now we are recording the journals with the chronological order, means sequential orders. And then most important thing, if you see the classifying as a ledger, if you see assets is a ledger, supplier is a one ledger, raw material is a ledger, stock is in one ledger. So we are classifying the ledger between the transaction, the posting entries from the journal to the respective ledger accounts. So the four classification is there: the business transactions, the source document, recording the journals, and then classifying the ledger. Now we are going to talk about the golden rules of accounting. So the three golden rules of accounting, key rules of accounting: personal account, and then real account, and then nominal account. When you're talking about a personal account, debit the receiver, credit the giver, and the real account, debit what comes and credit what goes out, and then uh, nominal account, debit all expenses and losses, credit all incomes and gains. The transactions are first recorded, classified, summarized, and analyzed, and finally reported as a financial statement. So when you're talking about a personal account, when you're talking about a personal account rule, debit the receiver and the credit the giver. If X is pays to Y money, borrow the money, X borrows the money from Y, so the receiver and the giver, the personal account. Debit what comes and credit what goes out for the real account. For example, we are purchasing a raw material. Raw material comes in, we are paying a cash. Raw material comes in, we are paying a cash. So debit what comes in, credit what goes out. And then finally, debit all expenses and losses and credit all incomes and gain. What does it mean? When you are making an expenses, so we are spending on purchase of stationery. So it is an expenses. Payment to the salaries to the employees. It is expenses. So when you are selling a fixed asset at a loss, that is a loss of a fixed assets, loss on sale of the fixed assets. So we need to debit all your expenses and losses and then credit all incomes and gains. What is income? When you're making a sale of an asset, sale of an inventory, sale of a fixed asset, sale. So when you're talking about a sale, that all comes under the income. The income classified as a regular income. Miscellaneous income is also there, business income is also there, gains, profit and gain. So what is gains? When you are making a sale of an asset, when you are getting a profit, that is a profit on sale of a gain from the sale of an asset. So as I repeatedly, once the transaction are first recorded, classified, summarized, analyzed, and finally reported as a financial statement. When you're talking about a classification of the balance sheet items, so there will be, as I mentioned very clearly, debit and credit. So debit and credit will be always be matching. That is called as a matching concept. So when you purchase an inventory, it will be an asset. It will be classified as an asset. So in a balance sheet, we'll be having about a fixed assets. Under the fixed assets, furniture, land and building, it becomes under the fixed assets. Current assets, debtors, sundry debtors, risk, cash at bank, it becomes under the current assets. Cash and bank. So it will also becomes under. When you're talking about liabilities, what is not paid due to the supplier, we got a purchase of raw material through the credit. That is supplier, right? We also borrowed a loan from the bank. So that is we want to repay the bank, repay the money to the bank. That means it's a liability to us. Owner's equity. What is a profit and loss account? When you're earning a profit, when you're making that, it is a reserves. So it is accumulating the reserves to the owners who have invested the funds. That is called a preference share capital, equity share capital, debentures, the various forms of investments. Now, so if you notice that assets will always be equal to the liabilities plus the owner's equity. So finally, the record, classify, verify, analyze, and close. So when you're talking about a record, recording the journal entry, classify with the help of ledger, whether it is a raw material, whether it is a inventory, whether it is a furniture, whether it is on expenses, we are classifying, verify. How we are verifying? Whether with the supporting document, we are verifying that whether it is matches with the record with the help of the trial balance. Debit and credit will always be matches with the records. What we have got it from the supplier, what we have got it from the customer. So the evidence to verify documents and analyze it with the help of the profit and loss account. We will be analyzing whether it is a profit, whether we are incurred loss, why we are incurred loss, why why there's a profit margin, what is a profit margin. So we'll be making a business performance analysis with the help of the balance sheet, and then balance sheet and profit and loss account, and finally the month end process. We'll be making a lot of adjustment entries, the due entries, and then we'll be making outstanding entry, provision, accruals, deferrals entries. We'll be making that. After making all your adjustment entry, we'll close the accounts for accurate reporting. So this is the basic of accounting. In coming sessions, we'll also be covering the basics of accounting in detail, and also SAP concept. Now we are giving an overview of the concepts of the basic of accounting and SAP FICO. Thank you.